Alright, so check it, man. For those of you that want to learn how to break down a stock analytically, I'm an analytical trader. I'm more of a strategic and analytical trader. I don't believe in losing at all. I don't believe in losing trades. I believe in all winning trades 100%. I know that's kind of like what, but before I enter a trade, I make sure like I'm very particular on my positioning, and I'm anticipating like if a stock does this, I'm going to do this. If a stock does that, I'm going to do this. So I've been consistent with my trading, and that's the key. That's the key. So what I'm going to do is break down exactly how I break down the stock, the movement. It's going to be, it's going to be a simple way for you those that's starting to invest their own monies or day trading or whatever the case may be. And it's going to really teach you how to be more consistent with your trades. I'm gonna think out loud, so I'm gonna show you like how my brain is processing everything. I'm gonna give you a couple of indicators that I use as well that will help you to be more consistent in your trading. So just follow me and I'll show you exactly how it works. Alright, so let's go to, alright, so I usually go to Yahoo is my home page. So I'm gonna go Yahoo. I'm gonna type in, this is the last stock that I traded, and I traded a call. I'm an options trader as well as a traditional stock trader, but I did a call. So let me break this stock down for you on this. So you can go to Yahoo Finance, you just type in the stock ticker, a random stock ticker if you want, or you could just go to Yahoo Finance and type in, to the NASDAQ or whatever. So we're gonna go to advanced chart. Now I like to look up some common ones, but I might as well start with this. I'm gonna show you how to break this down real quick. All right, so the first thing you see is this is a line chart. A lot of people use the candle chart. I use line charts. I use a line chart because the patterns design, it helps me to identify the patterns in positioning. For instance, if you enter here and sell here, that's a profit, and then you enter here and sell here, that's a profit. You enter here and sell here, that's a profit. So it's about knowing when to enter and when to exit, right? Okay, so the first thing is this. You want to get your indicators, right? What I like to do is a moving average. That's one of my indicators. On the moving average, I usually go with, let me see, I usually go with this 60, I go 60 day, and we're gonna go with 60-day moving average. And instead of simple, we're gonna go to exponential. And I'm gonna I usually go with the color green, right? That's a 60-day moving average. This is called an indicator, ladies and gentlemen. This green line represents moving average. All I simply did was went to indicators, clicked on moving average, typed in how many periods, 60-day period, and I changed this to exponential. That's all I did. That's all I did. Okay, so you see the green line here. This represents what? The average of 60-day moving average. It averages everything. And even just from this, you can see a pattern. See how it always make reference to this green line one way or another? It make reference to it, right? So that's what the moving average does. It's about creating a reference. Now, I'm going to go to another indicator. This is called RSI. And see, that's the key. That's really what you pay for. When you pay for programming, when you pay for these things, I'm gonna go with purple. I'm gonna change this period. I'm gonna change it to 7. All right, but really, what you pay for when you're paying for these programs and when you're paying for services, you're paying for indicators and setups, right? And I'm gonna go one more indicator. I'm gonna give this one to you for free. This is gonna be a good one. I'm gonna go RSI again, and instead of 7, I'm gonna go 2. Now this is an easy setup for you guys out there, and this is really going to show you how. All right, so this is pattern. So RSI takes the average of pricing, right? So what a RSI does, it takes the average of pricing, and through the averages it can determine if something is overbought or underbought. So if it's overbought, this would be the high levels right here. This will show, and this goes up to 100%. So if it's at 97% up here, eventually it's going to go down because it goes up to 100%, if you understand me. So this is 97.96. If you see all the way up here, for the most part, not in every case, you can expect, as you see the price here, it drops, right? Because it's overbought. If the pressure's too high, so it has to come down. So I'm just going to give you a couple of quick pointers of how I break down the stock really quick and what it's about. It's about recognizing the pattern, recognizing the personality of the stock. You know, if you're long-term investing, then you can really reference to the moving average, right? So say this moving average, you see which way it's going? Downward, right? Let me draw this a little bit. I'm gonna try to draw it and see if I can just so you understand where I'm coming from. All right, so you see this is going down. Yeah. So if you see it going downward, that means you can anticipate a downward move. So when do you buy? That's the question. When do you buy? So if it's downward movement, as you see, I just gave you one indicator, this moving day average, and I gave you two down here. So if this is going downward and this is overbought, right? What can you expect? I'm gonna say it again. If this moving average is going downward and this signal is overbought, what can you expect? A drop. So if you just simply took the 60-day moving day average, 60-day period, and you took that moving average and you followed it like this, right? Your buy point will be at the point of at the moving day average point. You see that? So your buy point would be right here. Right here would be your buy point. Overbought. So if this is going downward and you're at an overbought position, then guess what? You can enter here and then take the drop. So this is a $7 drop right here. And so what I like to do is I like to set up my indicators as such, and then I use the moving day average as entry points. So usually I consider like the moving day average, I consider it like the ground, almost like a basketball, right? So usually, like if I see a stock drop down to the moving day average, I expect it to bounce off of it or either break it. If it break it, I know that it's a downtrend. If it bounce past it, it's an uptrend. You see what I'm saying? So this is just a simple setup. If you just simply looked at the moving day average, if you long-term trading and you're here, you enter here, you see the moving day average on the upward spiral. See that? So you can enter here at the green, but you have to see the angle going upward. You see that angle going upward? So if you see your moving day average going in this direction, then you can enter in at the point of moving day So you can enter in here or here. If it's up here, then you might want to wait. But if it's at the point of here, enter in until the direction changes. Now here is a directional change. So let's look at that. Here the direction changes. You see that? See how that direction changed right there? I'm giving you some free knowledge right here, man. It's gonna help you be consistent. That's a direction change. So where do you enter? You enter for a put. This is a downward trend. It's just one stock. I can show you multiple stocks, but I'm gonna just show you this one. So here you could reference to the moving day average. That's around 177. So at 177, you can expect it to bounce off the moving day average, right? Until this moving average changes directions, you can bounce off here and use that moving day average as a sense of marker, as a sense of technique. You know what I'm saying? That's one way. That's one of the simple ways. See, as you can see here, overbought. All right, so if it's overbought, if the moving day average is going upward, what do you want? You want underbought or overbought? You want underbought. So if it's upward, you want underbought. This is the RSI 2. You want underbought areas to buy from, and that's this. So if the moving day average is going upward, right, and you have and you see on the RSI 2 that it is an underbought area, that might be a good time to enter, ladies and gentlemen. And when do you let go your position? Oh, that's easy. Once it get to overbought, or once it get to that line, and that's around here. So that this right here is $181 per share. This right here is $204 per share. That's over let me see, $181.18. That's over. That's $10, 20. That's like over 20. That's about a 20%, $36. That's about a 20% increase in price. Now, if you're trading options and there's a 20% move, you're probably going to profit about 30, 40, 50, 60% on that, just that trade. But if you're at an overbought position, this is a simple way to day trade. I gave you some indicators, and let me tell you something. What you really pay for in services is indicators and setups, and I just gave you a simple. I gave you RSI 2 with the RSI 7 and this moving day average, 60-day moving day average. You reference to those three and you have a simple setup. All right, let's go to one more stock real quick, because I don't want to take a lot of your time, but I want to show you this. Let's go to Apple. Now, if you go to Apple, you see the same thing. Make reference to what? The 60-day moving average. These are just averages, ladies and gentlemen. One thing about it, you cannot fool the averages. You can't fool the numbers. You can't fool human behavior. It's all math, it's all science, and it's all patterns. All right, so once you really understand the patterns, you understand that, you see how it's making reference right here, it's making reference right here, but you see the angle, and this is what I'm saying. You see the angle of this moving day average is up, right? So where do you buy? You buy at where? Low, underbought prices right here. You see the RSI 2 right down here, you see it? This is where you buy. If it's an upward movement, you buy here. If it's a downward movement, where do you buy? Up here. Now, what happens if you buy at the overbought position and it keep going? If you buy at an overbought position and it keeps rising, you just add another position. Just keep layering until it drops. Until it drop where? Reference to your moving day averages. That doesn't lie. So you see, this is now pointing which way? This is pointing down. So where do you want to buy? If you're short in the stock, you want to buy at the overbought position. Buy at overbought, and where do you sell? When you get to this line down here, which is the 20 point. You don't want to risk way down here, but you want to at least, when it get down here, you want to at least go ahead and let it go. You know what I'm saying? So that's just an easy way of entering and exiting positions. And also this tells you if a stock is overpriced or underpriced, because at the 60-day average, this is what the stock is worth. This 60-day moving average represents the average, what they're worth. So when the stock fluctuates outside of that, it's either overpriced or underpriced. All right. So like I said, the trends and the movement and the direction of movement is important. And this is just a simple way of breaking down a stock. Simple way. And I just want to give that to you, man. Comfortable profits, man. I've been doing this for a while, man. And I just want to give you a free tip for the day traders, man. It's all about being consistent. It's all about being consistent in your profits, man. And really, that one trade is most important. It is very important that one trade, you treat that one trade like it's your last trade. You don't, and I don't recommend putting everything out up front, but you want to say, you know, if the stock moves here and then it goes here, I'm gonna add to the position. If it goes here, I'm gonna take my profits. You use the RSI levels and you use that moving day average as a compass on entering and exiting your positions. Now it's different views. You have the day view, daily view, you have weekly view, you have 4 hour, you have the 1 hour view, the 30-minute view. It's the same principles for every time, you know, for every view, every chart view, same principle. If you use those techniques, those simple techniques that I've given you, it will help you to be more consistent in your trading. All right, Comfortable Profits Academy. If you have not subscribed to my channel, go ahead and subscribe. I'll be giving away some free techniques to make you more consistent in your trading. Seed to Financial Mastery. Mr. Andrae, I'm out. 100.